Hello and welcome to Swak Academy. In this video, I will make an in-depth stock fundamental analysis of the company Ulta Beauty. I will cover its business model, growth and revenue, profitability, balance sheet, valuation, and finally do the 3M analysis. So make sure to watch till the end of the video. Ulta Beauty was founded in 1990 by Terry Hansen and Dick George 34 years ago. Its headquarters is in Bolingbrook, Illinois, USA. Ulta has 56,000 employees. The company has $19.3 billion market cap. The stock is trading around $400 at the time I'm making this video. Ulta Beauty is an American chain of cosmetic stores. It carries both high-end and low-end cosmetics, fragrances, nail products, bath and body products, beauty tools, and hair care products. Each location has a beauty salon available to the public. Ulta is the largest specialty beauty retailer in the US. The company maintains an omni-channel offering 25,000 products from 600 well-established and emerging beauty brands, including their own private label. 15% of their sales are hair care, 24% are skin care, 17% are cosmetics, 10% are fragrances, 10% are bath products. Ulta Beauty revenue grew from $3.24 billion in 2015 to $11.2 billion in 2024, a 3.46x in 10 years, 13% compound annual growth rate. The only decrease was in 2021 due to the pandemic. Very good results. So Ulta is a growth company that will continue to grow. Now let's check the profitability of the company. The gross profit is the result of revenue minus the direct cost to create these revenues. The gross profit margin is the result of gross profit divided by the revenue. The gross profit margin shows the amount of profit made before deducting selling, general, and administrative costs. The gray line in the chart represents the gross profit margin over the years. Ulta gross profit margin is 39%. Very good results for a retailer. It is also clear that the margin have increased with revenue over the years, showing that the company is getting more efficient and have a good operating leverage. Next, let's check the operating profit and the operating profit margin. Operating profit is the net income derived from a company's core operation. It is the amount of money that a company has left over after meeting its operating cost, but before paying its taxes. Ulta Beauty operating profit reached $1.68 billion in 2024. Just like its revenue, the operating profit is growing and so is the operating margin. As you can see, it increased from 13 to 15%, showing again that the company is becoming more efficient and have a good operating leverage. Ulta made $1 billion free cash flow in 2024, almost 6x what the company made in 2015, 10 years ago. The cash flow is growing most of the time. The reason for the declines are cash investments done by the company to open new stores and grow organically. The cash flow margin is 9%, which means for every dollar revenue the company makes, 9 cents are transformed to cash and left to investors. Amazing results for a retailer. Now let's check the efficiency of the company. In other words, analyze the operating cost. The cost for SG&A, which means sales, general, and administrative costs, are $2.69 billion. It is clear that these costs are growing as a percentage of revenue over the years, which means Ulta has to invest more in sales and marketing to create revenue. However, the increase is relatively small, nothing dramatic. Now let's have a quick look at Ulta's balance sheet. Ulta has $2.76 billion in current assets. The current assets are the assets that are liquid and available to the company within 1 year. They include cash and short-term investments. The cash position is $524 million. The total current liabilities are the liabilities which the company must pay within 1 year. Ulta's total current liabilities are $1.57 billion. Ulta's total liabilities, including long-term debt, are $3.33 billion. Considering Ulta is making more than $1 billion in free cash flow every year, the balance sheet is very strong and healthy, which means Ulta can focus its investment in growing the company or buying back shares, which increases value for us investors. Now let's jump to valuations. Ulta has 1.79 price to sales ratio, a 16.13 PE ratio, a 10.46 price to free cash flow ratio, and an 8.6 price to book ratio. Pause the video and check how the current ratios compare to previous years. The company is not cheap with a 10.4 price to cash flow ratio, however it is also not expensive. Now let's do a discounted cash flow analysis to determine the fair price and intrinsic value of the stock. This is how my model works. I calculate the worst case scenario to determine the downside, a normal case and best case scenario. The first column represents the growth rate for the next 5 years. The second column represents the growth rate for the 5 years afterward. The third column represents the terminal multiple or the PE multiple at which the stock will be sold in 10 years. The fourth column represents the discount rate or the rate of return the stock will grow over the years. Considering a 10% growth the first 5 years, a 7% the 5 years afterward, a terminal multiple of 15 and 15% discount rate, the intrinsic value of the stock is $321. Ulta is trading at $400, 20% above its intrinsic value. However, for such a quality company with recurring revenues and growing markets, it is normal that the stock is trading at a premium to the intrinsic value. Furthermore, based on the assumptions we made, within 2 years the intrinsic value of the stock will be above $400, which is the current price. Finally, the 3M analysis, 1M for moat, 1M for management, and 1 for the margin of safety. Ulta has a strong moat. It offers low-cost solutions to its clients and have a very wide portfolio. This can be seen since 95% of the sales are done by reward members who buy again and again and again from Ulta. Furthermore, the number of these members is increasing every year. They reached 43 million members in 2023. Management did a very good job growing the company thus far. Revenues are growing, earnings are growing, and the number of members is growing. Furthermore, management is returning value to shareholders by buying back shares. Here you can see how the cash flow is being invested. For the margin of safety, Ulta is trading at a premium to its intrinsic value. The balance sheet is clean, so there is no risk of the company getting bankrupt. Now let's see what analysts think of the company. Most analysts are recommending to buy and hold the company. The analysts' average price for the company is $482, which is higher than its current price. So most analysts are bullish on the company. Ulta Beauty is held in the portfolio of 2 value investors. However, it represents only a small part of their portfolio. In conclusion, Ulta is a great company with a great future. The company is growing its revenue, earnings, its number of members and clients is also growing every year. The balance sheet is clean. Management have done a good job thus far growing the company and are buying back shares. So all in all, a very good company. However, it is trading slightly above its intrinsic value. I will keep Ulta Beauty on my watch list. Once the stock price gets below intrinsic value, I will buy it. I hope you found value in this video. If yes, please give us a like. This helps a lot. And consider subscribing. Thank you very much for watching.